All right, guys, so we got the Fed minutes report. All right, guys, so the FOMC minutes report. All right, so market's coming down a little bit today after higher than expected inflation data. SPY down to 512s. And let's see what else we get. So again, we got the FOMC minutes report. It's not an actual press conference. What it is a report breaking down why the Fed chose to make the decision that they did in the last meeting. So it is a kind of a breakdown of the last meeting is what this report shows. 2 p.m. Eastern Standard Time is when it's released. And yeah, let me get some music playing here. I'm gonna check out the chat in a second. So. Yeah, definitely a red day in markets though. But I mean, with higher inflation data, it's not a surprise. Okay, what's up, Nam? Andy, Kevin, Donald, Matt. I don't know about Apple. I have no idea. I hope so. I hope we get a reversal, but I really don't know what Apple's doing. Can y'all hear the music? You should be able to. All right, good. Google pretty flat, so that's not bad. Can you explain again what are the minutes about? So the minutes report breaks down the last FOMC decision, which was a Fed pause, right? So every 6 weeks, the Fed meets to determine if they want to raise or lower or pause rates. Lately, they've been pausing rates. If they lower rates, it usually signals inflation is under control, and so they're lowering interest rates to kind of avoid recessions and depressions and stuff like that. If they raise rates, it's usually because inflation is a problem and they're bringing interest rates up. Again, when I say rates, I'm talking about short-term interest rates, the federal funds rate specifically. Eventually, that trickles into long-term rates. But if they're hawkish, meaning they rate hike, they raise rates, they want to bring interest rates up and discourage economic spending. They do so in order to combat inflation, because when less people spend, businesses lower prices is the logic behind it. And so right now the Fed has been hawkish. They've been raising rates for a few years now. They've been pausing for about the last 8 months. So they raised rates and now they're keeping it steady. And the question is, when did they start cutting rates? Again, last meeting they paused rates, so they didn't raise or lower rates. They paused. The question is, when do they start cutting rates? Again, cutting rates will bring interest rates down eventually. Hopefully, at least that's the logic of it. And that's what it all is. Yeah. Yeah, markets are certainly down today after all this stuff going on, so. So again, you can see the NASDAQ here on the left. It's getting, I mean, it's not too bearish. I mean, it's down. Tesla's down some, but we took some profit off of Tesla this morning. Apple's down a little bit. Again, most things are down right now. You can kind of see the inflation report dumped markets, and now we're kind of consolidating back and forth. That's kind of what we've been doing for the whole day after 8:30. Short and chill, not taking profits anytime. I think the clearest thing that's happening in the markets right now is that the markets really want the Fed to cut in June, but that probably won't happen, so we're just waiting now. Yeah, I don't know. I don't think we should cut rates. I think inflation's still a problem. And again, I think today shows this. I've been very adamant about why I think cutting rates is a bad sign, like a bad move. I think inflation isn't under control yet. You know, it's still at, it's not at a bad level. Like, it's not bad, but I think cutting rates could cause it to get bad. And so I think it's way too early to cut rates. Here, I'm sorry, I gotta change these songs. Yeah, I had to change that song. That last song was a little bit too much for me. But no, so cutting rates is a bad sign. Or not a bad sign. Cutting rates, while it might be a good optimistic sign for the economy, it might be a bad sign for inflation. Again, inflation's not under control yet. And I think we should wait and push back cutting rates as long as possible to make sure inflation is under control until we start to see better moves in inflation on the downside. And until we can see that, I think it's way too early to cut rates. I think July is the earliest we should really consider it. June maybe, but not in May, certainly. I don't think we should cut in May. Apple's starting to move back up, though. We are seeing some rebounds. We'll see what the FOMC Minutes report does. The Dow probably taking one of the biggest hits today. The Dow's down a lot. SPY actually rebounding back up. You can kind of see it down here on the bottom right. Still down, of course, from the inflation report, but it's starting to rebound back up. So is Apple, so is Google. The Dow probably had one of the biggest reactions to this. And Tesla's been testing lows. No rate cut this year. I think we'll cut rates this year. I'm not saying I agree with it. I just think we will. Meta just confirmed its GTP or GPT-4 competitor Llama 3 is coming with the month. All right, chat. I'm watching 3-year-old Vladdy Jr. Who knew, man? He could throw a baseball really good at 3. All right, Apple bouncing back. Again, Google bouncing back. Do you think the Dixie's going down? The Dixie going down would signal the markets are rising. The equities markets specifically are going up. I don't know. I don't know. We're starting to see bounces in tech in general, right? You can see the SPY, NVIDIA moving up to 870s. Apple's back up to 150, or Google's back up to 157. Apple back up to 168. So we are seeing some rebounds in markets realistically right now. I hope, not realistically, really right now. I hope we continue to bounce back. All right, chat. Again, the FOMC Minutes report is a detailed file. I'm gonna have to put this on screen because every time, like, everybody always thinks there's a meeting and there's not, right? This is just a reaction to the last Fed meeting that they did. It's simply a reaction to the last FOMC meeting they did. Yeah, let me put this up on. They will cut rates, just stick with the plan. Yeah, I think we're gonna at least cut once this year. I don't think we're not gonna cut rates at all. I think we're gonna cut at least once. Yeah. So again, look at the Nasdaq ripping up back. Here, look at the SPY back up. Look at NVIDIA still trying up here. Yeah, buying showing up in the Nasdaq again. Google almost green on the day. They need to lower rates to get inflation down. It will unblock the housing market because shelter keeps rising because no supply. Maybe. Fed knows they have to crash this market, pull out a recession to bring unemployment up no matter what if they want to control inflation. I don't think that's true at all. I think they just have to keep interest rates high, But again, I think they can do a soft landing. They can combat inflation without, and they already kind of have, to be honest. Inflation's not super high. Again, I think a lot of people sensationalize these inflation numbers, but CPI at 0.3% increase, year over year CPI at 3.4, 3.5. It's not the end of the world. What was the last PCE reading? The PCE came out not too long ago either. So what was the last PCE? Wasn't it like 2.8%? Yeah, so the latest PCE was 2.8%, right? So the previous one was 2.9%. And so, again, I think when you look at what the Fed chooses to gauge inflation with the most, which is the personal consumption expenditure index, the core one, 2.8% is not bad, right? It's close. 3.5% CPI, it's not great, but it's not horrible either. It's not like inflation. It's not like inflation's 6%, 7%, 8%. It's still in the 2s and 3s, depending on which metric you look at. So, you know, I get it. People are sensationalizing these numbers, but again, we're not in crazy territory for inflation. Yeah, we'll see what PPI does. No, it's not options trading, it's futures, AC guys. Yeah, we'll see if we squeeze. I don't know. I hope so. I hope we go up. You know, I'm a big bull. I want the markets to go up, but I also recognize the risks. And again, PPI tomorrow. So every time we get CPI, we get PPI on the other end of that, right? So now we have CPI coming out this morning. Tomorrow we get PPI. We also get jobless claims numbers. We also get the Philly Fed Index tomorrow as well, right? So we got a couple different metrics dropping. Or no, I'm sorry. Tomorrow we get jobless claims, PPI, Bowman, Collins, Goolsby, and Bostic speaking in the afternoon tomorrow. Again, the Fed Minutes report's a pretty big release, though. We did get some rebounds here. We actually had a pretty good day trading as well. Here's my day. We barely lost at all, really. 8-to-1 win-loss ratio. Really nice gains. Up about 200 on my funded account here. We'll keep growing it. And, yeah. Not today. Yeah, I mean, we'll see. Will today's CPI report have any effect on this Fed minutes? No. This Fed's minute report is a reaction to the last FOMC meeting. So it has nothing to do with yesterday or today or anything like that. It has to do with the last FOMC meeting and why they made the decisions, what their outlook is into the next one, stuff like that, right? So we'll use AI to interpret it quickly, is what we always try to do with the Fed minutes report. So we usually get AI to break down some stuff. All right, guys. Whew. You guys ready? Load them up. Why would they cut rates? Yeah, I mean, I don't know, man. I think it's way too early. I think it's an election year, so they might have pressure on that end to cut rates, is what I think. But I disagree with it. I think inflation isn't necessarily... Like, inflation's not bad. Again, we're at 2.8, 3.5%. 2.8 to 3.5% is where we're at for inflation. And that's not bad, but I think it can pop up to 4, 5, 6% easily if we start to get too dovish in the Fed, right? So I still think basically that we need to sustain pauses on the federal funds, short-term interest rates, and, you know, allow inflation to go down a little bit more, maybe for another 6 months before we start really targeting rate cuts. I think it's just too early. Don, yeah, I mean, I tend to agree with Don here. Don says, it's not like it's fun to be a consumer right now, but the economy seems to be doing more or less fine with rates where they are. No shot they lower them unless something hits the fan. Well, I mean, okay, I disagree with that, right? I tend to think the economy's doing okay. It's not, it's not the crazy 80s or anything like that. It's not, it's not the late 2000s after the mortgage disaster. It's somewhere between that. Jobs are strong, unemployment's low, inflation is 2.8 to 3.5%, so it's not in crazy bad territory. And the economy's doing okay. Banks are strong. Like those are things that make me think, hey, let's not cut rates. Let's continue to pause, right? Still, at the same time, I understand the Fed's pressure because it's an election year. They're probably getting pressured to cut rates early, stimulate spending, bring interest rates down, help GDP growth, because those are all talking points for politicians to make, if that makes sense, right? So we are getting pressures, I'm sure, from that end, but yeah, either way, the economy's not terrible. Again, you got some people that just don't understand economics that come around and act like we're in a recession right now, and we're not. We're just not. I mean, things aren't great. They're not horrible either. We're somewhere in the middle right now, I think. Sideways all day, maybe. I don't know. Depends on what the Fed Minutes report shows. Well, I mean, one of the standards, though, trolls, and maybe your name is telling, but one of the standards of a bad economy are jobs, right? Like, jobs are one of the most important looks at the economy. Are people working? Is unemployment high? If unemployment's high and people aren't working, yes, that can signal economic problems. If people are working, and unemployment's low and GDP growth is there and people are still spending, then it doesn't make any sense to cut rates. It just doesn't, right? And the economy in that regard is doing okay. It's not high unemployment, nobody's working, nobody can find work type stuff. Like, that's not what we're in right now, And again, I'm not saying it's good. It depends on who you are, I guess. I'm not saying everything's all rosy and fine. I'm just saying it's too early to cut rates. It's too early to bring interest rates down. It's too early to cause in those inflation pressures, in my opinion. I think we should wait. All right, so tech dipping back down a little bit. Yeah, well, we'll see. Personal consumption, consumer price index and the producer price index drop tomorrow. So we'll see what that looks like. Again, Google at 157. So let's see if Google holds the VWAP at the 200 EMA. The jobs number is fictitious. I mean, look. Nobody cries manipulation more than somebody that wants it to be the other side, right? An example of this is the AMC community. AMC community says, AMC's not really weak, or GameStop's not really weak. Just manipulation happened, right? Like, nobody screams manipulation more than somebody that's wrong about what they want to happen or what they think is happening. I'm not saying there's not manipulation going on, but I think we got to look at the numbers as we get them. As always, this is how it's been business as usual for decades. I think we got to look at the numbers and work with the numbers that we have, not just kind of claim all the numbers are faked or whatever. It's easy to say that if you don't like the numbers that are coming out. And again, a lot of it has to do with political bias, and I just try to kind of stray away from all that stuff. I don't care about politics like that. Unless it's directly relevant to the market and news, then we're not really going to cover that or argue about it too much. But yeah. NVIDIA at 864s. You're wrong about AMC. I mean, I think the struggles with AMC are very obvious, which is that after 2020 and the pandemic, people stayed home. They stopped going to movie theaters as much. That's the first problem that they faced over the past half a decade. The second problem is that movie studios in general not only are striking, but they're also causing they're also being much more strict in terms of greenlighting new series and new movies in theaters, right? So they're not putting as many movies in theaters. They have changed the standard of that to where they're putting more movies directly to streaming, and so they're not spending the money and taking the risk to put movies in theaters anymore unless it's huge movies. So less movies are going to theaters, and so that's obviously going to bring the revenue of movie theaters down, right? The other problem is that, again, there's just the standard of movies are changing. Netflix and companies like Netflix are producing their own movies now. And so you're getting high quality movies from home. And that overall, when you look at it objectively, is like changing the standard of how people watch and consume movies. They're not going to the theater as much anymore. People still go to the theater, but it's certainly not as much as it was. And overall, that's just causing movie theater revenue to decrease over time. I'm not surprised AMC. I'm in AMC, right? But I'm not surprised it's down a lot. And I think saying that's wrong or arguing that that's not true, I think AMC community just has this huge following of traders that refuse to look at the reality of things and instead blame shadowy short sellers. AMC was never GameStop. The float was always too large. It was never going to have some crazy parabolic squeeze like GameStop was. The float's just too big to call something like that. GameStop squeezed because it had 40 million in the float, so there was barely any shares out there, and it was really influenceable for short squeezes specifically. AMC was just never that, and most of the people that are pushing conspiracy theories on AMC are just trying to grow a following online, if we're being completely honest about it. And I think that's pretty self-evident. I don't think that's really hard to look at objectively and see. But hey, if you disagree, it's all love. It's all good. I guess in the end, I don't like to be manipulated, including by communities of shareholders, right? And I think one thing that's objectively true with AMC is that they shame you if you're bearish. They shame any negative argument towards them. And I think whenever you're only looking at one argument, it sets yourself up to be manipulated. Apple doesn't have to talk people into holding shares because people know it's Apple, right? The only communities that make you feel really bad if you give us a bear argument are communities of people trying to talk you into holding a really depreciating asset like AMC. And again, I'm in AMC. I hope it goes up. But the argument against, the movie theater industry has obviously changed over the last 5 years, right? Despite what confirmation bias is really, really strong with that community. They're so desperate for it to go up that if they look at it objectively, it hurts. And so they just kind of pretend like any argument that I'm saying is just wrong, obviously wrong. They don't really give any counter arguments to it. And a lot of them are risking their life savings. So it just really hurts to look at the other side, I think, for them, Anyways, it's all good. AMC squeezed to $70, right? And again, that's about as high as it was going to go. I'm not saying AMC can't squeeze it all. I'm saying it's not going to go from $3 to $550 like GameStop did. Why? Because the float is 10 times larger than GameStop's float ever was. I'm not going to argue about it, really. People saw GameStop squeeze, and they thought that squeezes were just going to happen all the time. Most of them were pretty new and only entered the market when that stuff started to happen. And so they were really kind of gullible and naive, I guess is a better word for it, thinking that AMC was going to squeeze just like GameStop. And it was a different story. It was a different story. But again, it's all good. We're going to talk about the Fed minutes report. We got 21 minutes before it's released. Again, this is a breakdown of the last Fed meeting. We're going to look at it, break it down, watch the market reaction to it. Again, earlier we had CPI inflation data come out, universally higher than expected, although most of them were pretty flat month to month. The only one that did increase from the previous reported period was the year-over-year base inflation. Core CPI year-over-year was flat month to month. Core CPI month to month and base CPI month to month was also flat. Again, the only one that really increased was the base CPI year-over-year. This is just a report. It's not a meeting. Yeah, I mean, crime. Listen, it sounds like you're still part of that community and kind of, believe in the hype. And again, it's all good, bro. It's not like I'm shorting AMC. I'm actually long in AMC right now. Uh, but again, I think I think it's really easy. Like, I think it's a community of confirmation bias, right? Like, it's a community of people who are so desperate for AMC to go up that they ignore red flags. They feel like they're part of a community, and that makes them feel all warm and fuzzy, and that's great. But you don't need stuff like that for Amazon, for Apple, for Google, for Home Depot. Like, you can hold those stocks, and nobody's going to shame you if you give a bear argument for it, for the most part. And so again, the community's trying to talk people into not selling because they're so emotional about it that they end up just kind of ignoring reality. Again, it's all good. I don't like to be manipulated, including by a stock community, and I think I think that community manipulates people to a certain extent. Not all of them, but. It's the difference between investing and speculating, yeah, for sure. Colts have staying power, yeah. A lot of AMC holders have 99% of their portfolio invested into it, so they're overly emotional. Yeah, I mean, again, I agree. We got 18 minutes, chat, 18 minutes. Let me get a timer up here. And again, it's all love. Like, I'm not against you guys. I'm actually in AMC with you. I hope it goes up, and I hope I'm wrong. But, Adam Aaron saying, hey, guys, the special purpose divvy's the greatest thing ever. Everybody vote for it to prove it. It's going to save AMC as well as popcorn sales, and then coming through about 6 months later saying, hey, guys, getting rid of the ape divvy is the greatest thing ever. Too much conflicting stuff for it. All right, chat, here we go. We got 17 minutes. 17 minutes. NASDAQ's very flat, very sideways. Typically, we get some type of movement AB in terms of Forex pairs. Depends on which ones, of course. Futures, the SPY, the Q. Oh, did we do a poll today? My bad. Here, let me do one. The only real question is, does the FOMC Minutes report cause bullish or bearish action? Vote on that poll. We got the poll live. Let me know what you guys think. Powell's not actually talking. It's just a breakdown of the last meeting. Do we expect some downtrend movement in natty gas later? I don't know. Maybe. FOMC is the Federal Open Market Committee. Which, yeah, we still got 15 minutes. Yeah, where's gold at right now? Gold's not down that much relative to a lot of other things. Where's gas? Gas? Okay, I can't do this. Yeah, I don't know. I had to chase the song too much. Yeah, Again, we're at $86 for oil right now. Tesla down today. Google bounced back, but it's kind of, again, we're so choppy. I don't know if the market's waiting for this or waiting for the PPI report tomorrow. I think it could be either one. Yeah, that music was popping. Yeah, I don't know, man. Powell's not speaking today, no. Yeah, let me fix this. Yeah, we added this. Remember, this is not a Powell speech and it's only a report. What am I drinking? Stevia Cola. Zevia Cola. It's like no sugar Coca-Cola. It's got caffeine in it. That's why I'm drinking it. Should sell or buy gold on FOMC? I have no idea. Why does everybody always ask if they should buy gold? Like, I'm genuinely confused. Like, are y'all genuinely asking me if you should buy gold or not? Do y'all really think that I know what gold is going to do? Do y'all really think I know? Right? I have no idea what gold's going to do, chat. Genuinely no idea. Gold's up a lot the last 10, 15 days. But are you really going to be, like, if I say yes or no, are you really going to listen to that and, like, take the accompanying trade in gold? And if not, why ask? You know? You think I've got some insider gold knowledge here? Nobody knows what gold's going to do. Nobody knows what the market's going to do either. Gold is not really gold. It can lose bad too. Yeah, I mean. Yeah, I guess. Top 3 smartest? I guess so, you know. All right. Oh, oil at $86. Google at 157s. We're still just kind of sitting back waiting. Again, we made some money today in futures. I don't want to give it back, so we're just kind of sitting on those gains for the day. I'm not really trading the news, I would say. I might watch the news, but I don't know if I'm going to trade it. All right, we got 12 minutes, chat. 12 minutes. I'm still in gold right now as well, but short term, I don't know what gold is going to do. I hope it goes up. We want to know, so we do the opposite. What the top 3 worst trader does. Definitely top 3 worst ever in the world, for sure. Remember, guys, listen. Remember, I have no idea what I'm talking about. I'm terrible. No idea what I'm talking about. Understand CFTC 4.41, all that good stuff. Don't copy me. We got 12 minutes. 11 minutes, really. I don't know. Like, that last FOMC meeting, do y'all think the market's going to go up or down from this report? Let me look. 55% are bullish. 45% are bearish. Bitcoin, didn't Bitcoin dip today? Let me see. Bitcoin at 69,000. It's up a little bit today, actually. So Bitcoin's rebounded all the way from the FOMC, or from the CPI report. Pawns thinks C6 the gold, and comes from how volatile futures are. And gold moving at 10 cents each tick a move is $100. I've been trading it the last week. That's crazy movement. I lost money on gold yesterday, I think it was, trading it too early in the morning. I lost money quickly too. I didn't trade them again. I'd have to trade micro gold futures. But gold's flat as well since 8:30 this morning. Gold's been mostly sideways since this report. Bitcoin's up a little bit from CPI, but all right, guys. SPY at 513. It's trying to bounce back up. Nvidia, very neutral day as well. It's made it this long. I'm still bullish. CPI report wasn't the nail in. Yeah, I mean, I don't know. Google's been moving a lot too, with mostly AI news and chip news. Okay. Why are you counting down? SPY rally to 519, 520 in today. I don't know. Time to short the Dixie. Can you even short the Dixie? I gotta try it. Hold on, let's see what happens. No, it doesn't even let me short this. No, it doesn't even let me short it. I'd have to trade Forex or whatever. I'm sure there's another way to do it, but... Why are futures so volatile for gold? I don't know. Just a big range for... Gold's been volatile the last 10 days or so. All right, chat. We got 6.5 minutes until the FOMC Minutes report. We got about 1,500 people here live watching. Should I throw it in sub-only mode? I think I should, right? Let's see how many subs we got today. Yeah, we need like 400 subs to break 134K. I think we could probably do that pretty well. Seven minutes really is how we get. This is a little early, so we actually got about 7 minutes left. Hit the live button next to the play button. Again, this report should give us some good action. It should detail why the Fed made the decision that they did. Yeah, please stop spamming buy whatever crap stock you're talking about. Looking at our poll, 57% bullish, 43% bearish. Are you in a position? I'm in a bunch of positions. Nvidia pushes. Your thoughts on the jobs numbers the other day? I think they were strong. I think inflation data is up as well. I don't think that's a coincidence, which is why I think it's too early to cut rates. Yeah, Nvidia dipped a lot yesterday, rebounded a little bit today. I don't know what they're going to do, but you can see Nvidia here. Had a pretty big pullback yesterday from 880s down to 840s, 830s really at some point this morning. Back up to around 870, 860s now, so. All right, chat, we still got 5 minutes left, about 5 minutes. Yeah, I mean, the NASDAQ 100's down since the CPI. CPI came out early this morning. Again, all higher than expected, about flat month to month. So we are down certainly from CPI that dropped right here. We are down certainly from that report. We've dropped a significant amount. Again, most of CPI was higher than the expected analyst, numbers or percentage. Most of them, again, were flat reading to reading, though. So, like, the only one that wasn't flat was the year-over-year base CPI report, which showed up at 3.5 versus 3.3, I think is what it was. 3.4 maybe expected. And so they showed up at 3.5.1% higher year-over-year. The rest of them were flat reading to reading, although they were higher than expected by 0.1%, right? So that is essentially the report. We got 4 minutes here, chat. 4 minutes. I'm long. Is this meeting going to change the market a lot? Not necessarily. Market will talk about cutting rates in June, which will make market tank hard. Watch. Maybe. I don't think so. This isn't a Fed meeting. This is just a detail on why they chose to make the decision they did. I don't think we're going to cut in June. Or I don't know if June is okay. June and July are fine. I don't think we should cut in May. This is basically what and again, if we look at the probabilities of cuts, right? So if we look at the actual probabilities here, next Fed meeting is in 21 days. Most people for May are expecting a pause. 3.7% of people expect a cut. June is when most people are still expecting a pause. So people, after this inflation data, I'm sure this changed, where most people are still expecting a pause in June. 16.5% of people expecting a 25 basis point cut. 0.5% of people expecting 50 basis points. July, still, most people were expecting another pause in July. So they're not expecting us to cut rate in July either. It's got some people expecting a cut, but certainly not the majority. September is where it finally pivots to where most people are expecting a cut now in September instead. We'll see. We'll see. It'll be interesting to see what happens. We got 2.5 minutes, chat. 2.5 minutes. We got about 2,100 people here live. But let's get ready. All right, again, we're going to use AI to interpret this report. All right, we're going to report how many words. We're going to break down this whole report in about 500 words. Okay, we've developed an AI tool that we're going to be debuting sometime soon, where it breaks down everything. And we're going to break this whole report down into about, what's a decent word count? 600 words? Let's see. Okay, 600 words is probably good. All right, chat. We got a minute and a half left. Again, we've developed this AI tool that summarizes documents. We'll use 600 words, I think is probably the right move. All right, guys. Again, this is a little early. We still got about 50 seconds left. 50 seconds. Hit the live button next to the play button. Yeah, I mean, we're not selling it. It's going to be free. Not your, but complain some more, man. That's okay. We got 30 seconds, chat. 30 seconds. You seem like you're really fun at parties, huh? FOMC Minutes report drops in about 20 seconds, chat. 20 seconds. All right, here we go. All right, guys, 10 seconds. 10 seconds. Again, hit the live button. And here's the report. Let's watch the markets. Waiting for this report to go live. Again, we got to wait for this minutes report. NASDAQ hasn't really moved. SPY moving up a little bit. We still got to wait for this report to go live. Waiting for the minutes. Refresh. Refresh. This is a minutes report from the March 20th meeting. Let's see if we can find anywhere else. All right, waiting for the minutes report to show. There it is. Okay, so let's do the HTML document. Let's do just text. Or no, let's just do the URL. Summarize. All right, so we're going to summarize this report to about 600 words. So bear with me. It takes a little while. It's a big summary from a lot of documents. Let's see how well I'm testing this report now. We got ChatGPT up. All right, so we're going to start reading this report. The manager turned to review financial markets over the intermeeting period. U.S. financial conditions eased modestly since January FOMC, with higher equity prices more than offsetting. All right, so here we go. So here's the summary we're going to give you. The FOMC, Central Bank of the U.S., held a joint meeting of the Federal Reserve Open Market Committee and the Board of Governors to discuss monetary policy principles and practices. The meeting covered topics such as the economy, inflation, employment, stability, and finance, and discussed the use of various tools such as interest rates and open market operations to achieve the committee's goals. The committee emphasized the importance of effective communication and transparency in its decision-making processes. The meeting highlighted the Fed's commitment to maintaining a stable and growing economy and its willingness to use a range of tools and strategies to achieve this goal. The committee reviewed developments in financial markets and policy rate expectations and discussed slowing the pace of balance sheet runoff, basically QT, to facilitate a smooth transition to an ample reserves regime. The vast majority of participants preferred to reduce the monthly pace of runoff by roughly half, so basically reduce QT by roughly half, with little need to adjust the cap on agency debt and agency mortgage-backed security redemptions. The decision to slow the pace of runoff does not mean that the balance sheet will ultimately shrink by less than it would otherwise, but rather allowing for ongoing declines in security holdings consistent with reaching ample reserves. The latest economic data showed mixed signals, with some indicators pointing to a slowdown in growth and others suggesting a more resilient economy. Private sector job openings and quits rates were little changed, while wage growth remained subdued. CPI inflation continued to decline, but recent progress was uneven. The Fed's Bank of Dallas trimmed mean measure of 12-month PCE price inflation was 3.2% in January, down from its year-earlier level. Real GDP growth in the first quarter is expected to be solid, but slower than its robust fourth-quarter rate. Business fixed investments may be decelerating, while residential investment growth is expected to pick up. The nominal U.S. international trade deficit widened in January, with imports of capital goods and automotive products increasing, while exports grew only slightly. Foreign economic growth was generally weak, but some signs of firming have emerged in Europe. Most major foreign central banks kept their policy rates unchanged. Basically, most of them paused just like we did. And the market implied path for the federal funds rate through 2024 increased markedly, leading to higher intermediate and longer-term treasury yields. Despite the rise in interest rates, broad stock price indexes increased amid upbeat corporate earnings reports and AI. Yield spreads on investment-grade corporate bonds were unchanged. Financial markets experienced a stable period over the intermeeting period, with risk appetite improving and foreign equity indexes increasing. Short-term yields in the AFEs were boosted by less accommodative than expected communications by the ECB. Longer-term AFE yields and the broader dollar index were little changed net. The Bank of Japan exited negative interest rate policy and increased its overnight policy rate, with market reactions being limited. Conditions in the U.S. short-term funding markets remained stable, with a decline in ONRRP take-up primarily reflecting money markets funds reallocation of assets to treasury bills. Following borrowing costs remain elevated in domestic credit markets, with rate on loans to households and small businesses increasing. Credit continued to be available to most borrowers, with large non-financial corporations finding credit generally accessible. Capital market financing was robust and consumer credit remained easily available. Credit quality for large firms and home mortgage borrowers remained solid but deteriorated further in sectors such as CRE and credit cards. Delinquency rates for varied type of loans increased slightly, with the exception of non-farm residential loans at banks, which increased to a level last seen in late 2014. The FOMC meeting in March saw a continued increase in office properties and CMBS pools, with a delinquency rate stable at normal to low levels for most property types. However, the deterioration in CRE credit quality raised investor concerns about the health of some U.S. and foreign banks. All right, so that's kind of a summary of the FOMC meeting. It really didn't do the last FOMC meeting in the minutes report. It really didn't do too much. We're going to look a little bit more in depth. Here's the report right here. So we have that breakdown. And again, that was a pretty good summary, in all honesty. Yeah, I mean, I'm reading this, like, kind of grazing through this. It was a pretty good summary. Well, let's see if we can find economic outlook. So the economic projections prepped by the staff for March was stronger than the January which is what we saw in the summary as well. The upward revision in the forecast reflected the staff's incorporation of a higher projected path for population due to a boost from immigration, the lagged effects of earlier monetary policy actions through their continued contribution to tight financial and credit conditions. We're still expected to hold output growth in 24 below the staff's estimate of potential growth. As those policy effects waned, output was expected to rise in line with potential in 25 and 26. The unemployment rate was forecast to remain roughly flat over the next several years. So again, unemployment is supposed to stay around 3.8%, 3.7, 3.9. PCE inflation were projected to edge down in 24, so they're expected PCE to drop, ending the year around 2 to 2.5%. And that would be a great thing if you do. That's around the 2% inflation target. By 26, total and core PCE inflation were expected to be close to 2%. The staff viewed uncertainty around baseline projections as close to the average of the past 20 years, as uncertainty was judged to have diminished substantially over the past year. Risks around inflation were seen as tilted slightly to the upside, as supply-side disruptions from developments domestically or abroad or unexpectedly persistent inflation dynamics could materialize. The risks around the forecast for economic activity were viewed as skewed a little to the downside, as any substantial setback in reducing inflation might lead to a tightening or financial conditions that would slow the pace of economic activity by more than the staff anticipated in their baseline forecast. So again, basically risks are to the economy, not necessarily to inflation. This is probably because they're going to keep the federal funds rate higher for longer, at least in terms of the CME percentages. Originally, most people expected us to start cutting rates in July. They've pushed that all the way back to September. So a couple meetings back in terms of when most people expect there to be rate cuts. It's probably, again, this probably is affected by these short-term reports that we got today, specifically CPI. But they also thought that we'd have some risks to that as well, probably because of keeping interest rates so high. What do you guys think? The market hasn't really moved that much. I'll put this link up if you want to check it out. There's the link right there if you want to check it out. Hey, thank you, AB. You're a fast reader. Hey, thank you. Top 3 in the world, you know. CPI is done. Only best coming for crypto markets. Yeah, it didn't really do much. Markets yawned over the report with little change. Yeah, for sure. What do you guys think? Markets haven't really done that much. Again, this is not really moving markets too much here. So, again, we put the report up in chat. You can also find it in the description. And so, yeah, let me know what you guys think. I'll give you guys some cliff notes of this report. We already gave you guys a full summary, essentially, here. But we'll give you guys some cliff notes. Participants noted disinflation process was continuing on a path generally expected to be somewhat uneven. All right, so we'll put this up. Participants generally judge risk to achieving employment and inflation goals were moving into better balance. They noted uncertainty about persistence of high inflation. So we're putting all this stuff. We'll put some cliff notes in the chat from other sources. Participants generally noted recent data had not increased confidence that inflation was moving substantially down. So we could see down to 2%. Participants pointed to geopolitical risks that might cause more severe supply bottlenecks, noted concerns that financial conditions might not be as restrictive as necessary. So basically, we're going to cut rates a little bit too early, is what the people are fearing. And I agree. I think that is the fear. Let's keep looking at some of the other cliff notes here. Most participants judged it be prudent to slowing pace of balance sheet runoff fairly soon, basically stopping QT. A few participants preferred to continue current pace of runoff until indicators showed reserves were nearing ample levels. So, interesting. Participants saw little to need to slow mortgage-backed security runoff. So, yeah. Interesting. Also, guys, if you haven't already, again, check out my sponsors. You can check out one of them. It's called Apex. It's a funded account program in futures. They give you a demo. They test your skill. This is it right here. We've actually made some money on Apex today in our 50K funded account. Now, they give you a demo and they test your skill. So if you're one of those people that want to learn to day trade, but you don't want to lose a bunch of money, try a funded account program first. It limits your risk in the beginning. Most day traders lose. If you put up 5K in the beginning, you're probably going to lose 5K if you put it into your own account and you try to day trade with that. Most day traders lose their first few accounts at least. And so with that in mind, limit your risk. A funded account program, what they do is they give you a demo and they test your skill with the demo first. On this one, to get funded in this account, I had to make $3,000 in profit on a $50,000 demo account without losing $2,500 first and following their rules. Once I did that, they fund me 50K with a 90% split. And so if I make 10K in this account now, I get to keep 9K. They get to keep 1,000 since they're funding me that money. I also get to keep my first 25K in profit. There's tons of great resources. They're one of the most legit in the world. They've paid out over 100 million in actual withdrawals to their traders. And it's just a great way to learn how to day trade. In futures, you can day trade essentially the QQQ and SPY in what's called the NASDAQ and the E-mini. And so, again, a great way to learn how to day trade, but limited risk. Although, again, they are a sponsor of mine. I'm biased because they pay me money. And so, of course, I'm biased in their favor because of that. If you want to check them out, here's the link. Appreciate the love. Bitcoin, where's Bitcoin at? How's Bitcoin moving in conjunction with this report? Bitcoin at 69.7 thousand. I want to day trade, but the pattern looks very boring. Like, we're right in the middle. Bitcoin up a little bit from this report, almost back up to 70K. Yeah, the FOMC minutes are already out. Market. Minutes report is out. Market hasn't reacted much to it. We'll put that up on screen. Yeah, if you start yelling buy or sell gold, I'm going to ban you. And so I'm probably going to have to ban a lot of people. So I'll let the current people that said it, you know, but if you start telling buy or sell gold and you're not really saying anything else besides buy or sell gold, I'm just going to ban you. Jerome Powell's not speaking. Oh, there's the first one. He's gone. This person's gone too. They have max losses that don't allow you to do it. This person is gone too. The purge, yeah, I guess. Google's ripping up. It's almost up to 158. The NASDAQ's actually pushing up a little bit. Underwhelming reaction from this report, though. It just didn't do much. All right, I guess we're... What strategy do you use on Apex? I try to build up a cushion and then... Thank you for summarizing news. Hey, all good, brother. I try to build up a cushion with dip buys, mostly taking advantage of support and resistance and dip buys. Momentum patterns sometimes. And once I have a cushion, then I scale up my size. And that way, if I lose, I'm kind of flat because I already built up a small cushion. So if I'm trading large, I already have a cushion. If I don't have a cushion on the day, I'm trading small, if that makes sense, right? So that way, I limit my risk. Paper trader, I mean, this account has got 70,000 liquid dollars in it. It's certainly not a paper trading account right here. This is a funded account on Apex. So, I mean, I don't think you could trade crypto. You might be able to trade micro Bitcoin and micro ETH, but I'm not 100% sure. Check with them. When they're not going to allow you to lose it. Liquid dollars is fuck. This news was, yeah, it's kind of boring. Usually we get a little bit more of a reaction from it, but not on this one. Are you familiar with the Robotaxi from Tesla? They're supposed to debut it in August. I'm not sure what they're gonna do with it or what it's gonna look like, but I'm intrigued by it. I'm interested. Do you think QT can work without causing a recession? How much of a gamble do you think the Fed is taking with trying to time the rate changes, and how does the Fed bond auction affect the economy? I mean, I think QT can work just because, just like QE works, using bond purchases and sells. Not really sells, but passive QT is what they're doing, which is just letting their current holdings mature and run off. It can work. I think we can do it without hitting a recession. I think that's something that we have seen. Like we're not in a recession. We're nowhere near it. Spending's good. Unemployment's pretty low. And now they're talking about ending QT. And I think if we end now, we're not in a recession. So yeah, I think it can work. What is that? What kind of chicken? Yeah. All right, guys. Yeah, so the FOMC report came out. Didn't really do much. We gave you guys a summary of it, gave you guys cliff notes of it, but nothing really happened. It's one of the most underwhelming reactions. Probably because CPI already influenced the market today. What's your opinion on PPI tomorrow? PPI will be interesting. PPI is expected tomorrow at 0.3% for base, 0.2% for core. We also have jobless claims unemployment filings tomorrow. So, I think that'll be fun too. And again, we'll be streaming that live like we always do right at 8:30 Eastern time. Where the PPI data comes out at 8:30 Eastern. It's 8:30, not 6:30. Determine if the Dow S&P continue dipping. It'll influence it, John, but it's not going to determine purely what it's going to do. It depends. Rhythmic is just a software platform. There's software login. So like with Rhythmic, I can use Quant Tower, which is what you see on the left side right here. This is Quant Tower. It's a software. TradeAvate is a web-based platform. It's not a software. It's a web-based platform. So it depends on if you want a web-based platform to trade on or whether you want to download a software to your computer. Yeah, looking at 10-year treasuries, they're up to almost 4.4%, so treasuries are still pretty high. We'll see what happens if they start really ending QT and cutting rates, though. Yeah, well, we got PCE a couple weeks ago, right, on Good Friday is when it was, and it came in at 2.8%, I think. So 2.8%. You bullish or bearish on the Dow? Didn't the Dow react really negatively today, Trey, on CPI? What's the Dow? Is it YM? I'm trying to think of what futures contract is the Dow. Is it YM? I think it's YM, right? Yeah, it's the Dow. The Dow had a pretty big reaction. But again, most stuff did the exact same thing. The S&P, the SPY, whatever you want to look at, the NASDAQ, the Dow. Most of it dipped a lot. Most of them look like this, where we dipped a lot, and then we've basically been sideways since 8:30 this morning. Not really doing anything. Nothing influences markets, only charts. Yeah, bro. Because this huge, ridiculous move right here in markets, it had nothing to do with the CPI report. Just technicals, brah. Right? Come on now. Of course it influences markets. CPI influenced markets really negatively this morning. Markets are now kind of sideways. Buy the dips until it doesn't work. That's kind of my strategy, Top 3 dips in the world. I trade gold sometimes. Jobless report. The jobless report is going to be, I mean, I'm not going to say it's insignificant, but the PPI report is going to be much more impactful, I think. Jobless claims unemployment filings are a weekly report on how many people are filing for unemployment. And so it's a weekly report. It's less significant. PPI drops once a month with CPI. So usually it's CPI and then PPI. So, you know, it's probably going to be more impactful than the weekly jobless claims report that we get every week. Tweets influence the market. They can influence the market. You know what I mean? Like, they could influence it. It depends on who tweets, to be honest. If Tesla tweets about Tesla bad news, Tesla's probably going down. That might drag the market down. If Jensen Huang tweets about Nvidia good or bad news and Nvidia drops, the market's going to follow it. Probably, at least. And so, yeah, I mean, tweets can affect the market, just like any type of broad news can, you know. It just depends on who it is, who's saying what. Warren Buffett, he could speak on CNBC and tank markets. He could rip markets. Jamie Dimon obviously tanked a lot of markets over the last few days with his really, you know, bearish look at inflation over the next year. So, I mean, people can influence things, of course. Reports impacts markets, but ultimately charts and technicals really do determine. Yeah, I mean, listen, you get like chart purists, and I'm somewhere in the middle. Like, I like technicals, but I also understand the significance of fundamental news, right? Like, you get people who they think that technicals, they're like, there's a very famous movie, I think it's from like 2000, and it's about this guy who goes crazy trying to predict an algorithm in the stock market. You know, so he's looking at charts, he's looking at technicals, he's seeing all these different crazy things that really aren't there. And he's using that, and it kind of drives him to a little bit crazy. I can't think of what the movie was, but I'll have to look it up. And again, I think technicals can work, but they work because other people think they work, right? They're milestone levels that other people are watching, and you're basically trying to predict psychology behind it in terms of TA. But you got some purists that think that every single move in the market, like we had a guy that was arguing with me one day, and it was about CPI, right? Like, the CPI report came out, the market dumped exactly like this. And then he tried to argue that this big drop was not from CPI, that it was completely unrelated to CPI, and that it was because some RSI and moving average crossover was happening at the same period. And again, I just you got to laugh at that. Like, of course, this is from the CPI report. I'm not saying anybody's saying that here, but you don't want to be such a purist in TA that you think everything's caused by technicals, because it's just not. Like, fundamental news are usually going to trump. If you could have the best technical pattern in the world, if a big fundamental report drops simultaneously, it can cancel out whatever technical move that's there, you know. And so with that, with maybe the exception of like extension, you know, and like broad longer term trends, certainly, but yeah. Hey, John, you need sleep. You're sharing with us what happened just 10 minutes ago. Hit the live button, brother. You're probably a little delayed on the stream, dude. Yeah, technicals are just market psychology. Fundamental news is actually like company health. And so, I don't know. It's saw a small trader stream today with about 500 indicators on it. Yeah, I'm more of a purist in charts. Like, I don't put up I put up the 200 EMA, the volume weighted average price, and that's really it. I don't put up much outside of that. There's no meeting today. Just an emotional casino, maybe. The upside down spaghetti at 13. Yeah, all right. Will we see all-time highs again? Yes, of course we will. I don't know when. Again, the natural move of markets is that it's going to go up long term. You know, it's why I dislike bears sometimes, because bears ignore the biggest statistical edge the market ever gives you. The market's going to go like this over time. Now, you might have crashes, corrections in between, but when you there's a very famous quote, and it goes, "When in doubt, zoom out." And if you zoom out long enough, your markets are going up. You know, mostly because of inflation. Like, we're going to lose dollars to inflation over time, and that means that markets are going to go up over time. Can anybody tell me what the conclusion is for the news? I mean, there's a couple cliff notes we could look at. Again, participants in the FOMC noted disinflation process was continuing, generally expected on the right path to be somewhat uneven. They judged risks to achieving employment and inflation goals were moving to better balance. They generally noted uncertainty about persistence of high inflation. They noted recent data had not increased confidence that inflation was moving sustainably down to 2%. Some participants pointed to geopolitical risks that might cause more severe bottlenecks in supply. Participants noted concern that financial conditions might not be as restrictive as desired, which could put upward pressure on inflation. Most participants judged would be prudent to begin slowing pace of balance sheet runoff fairly soon, which is QT. A few participants preferred to continue current pace of runoff until indicators showed reserves were nearing ample level. Participants generally favored reducing monthly runoff pace by roughly half from recent overall pace. Most participants saw little need to slow mortgage-backed security runoff, preferring to adjust cap on Treasury redemption. The Fed staff economic projection for March meeting was stronger than January's, citing higher projected population due to immigration. The FOMC minutes revealed growing unease over inflation, not merely statistical aberrations. And so basically, inflation's still a risk. Cutting rates is less likely, especially after CPI, I think is what we can gather from today. Cutting rates earlier than expected, which is now September is when they're expecting to start cutting rates. I think we're not going to cut earlier. At least I hope we don't. I think it's such a bad move if we cut rates too early. Inflation could spike even more, and I think what today's CPI report showed is that that's possible, and we just got to be careful. I agree 100%. Yeah, it's just too early. All right, I'm going to short this. It's a small trade. We're just going to play around. We're already up 200 bucks or so on the day. Day trading futures. We are down in our equities positions for sure, because most of the market's down after the inflation data came out. Now we've consolidated a lot. We're basically flat on this position. This is taking too long. I'd love to see a breakdown here, but this is really taking too long. Yeah, we're gonna get out here. It's just taking too long. So we're still up 140 bucks on the day. It's volatile, but so sideways at range. Yeah, I don't feel like giving back too much more to the markets. We tried. Get banned. good idea to invest in cannabis stocks? I don't necessarily. I mean, it depends, man. I don't think we're going to get federal legalization anytime soon. We talked about this morning. I don't think we're going to get Fed legalization anytime soon. I think one side says they want it legal, but then when they have the opportunity, they put out some crazy bill that they know is not going to get approved by the other side. And then they complain that it stays illegal because I think both sides are getting lobbyist groups paying them PAC money. They're getting PAC money. They're getting lobbyists from law enforcement, the pharmaceutical industry lobbying against it, putting some big money and big dollars behind keeping it not federally legal. So I'm just not a big optimistic person towards cannabis legalization. I want it to be legalized. I think it should be legalized and taxed because I think consumers are going to use it regardless of whether it's legal or not. So by keeping it illegal, you're putting people in danger essentially. But I think a majority of the world wants it legal. Yet somehow it stays illegal, and that's probably from big corporations, pharmaceutical, prison industry, law enforcement pushing to keep it illegal just because they can profit more from it illegal. So no, I'm not copy trading personally. I like to just build mine up slow and steady, but that's just me. I don't want people going to jail for it, but I don't want them smoking that out in public. Well, smoking is an obsolete thing, and you don't need to smoke anything now, and I would argue that as long as you're not smoking it, it's objectively less harmful than alcohol, and that's sold at gas stations. You know what I mean? Like, I don't know. I don't want to get into the argument. I've done the argument the last few days, but yeah. Powell's not speaking today. This is just a recap, a reaction to the last FOMC meeting is what it is. I don't like MACD. I like VWAP 200 EMA milestone levels. Watch for crosses over and under it. And then trade the appropriate pullback or dip or bounce to it. Everyone smokes in my neighborhood. You sure you don't just have like this neighborhood skunk running around causing problems to everybody? CPI poorly. Yeah, I don't know, man. I'm waiting, guys. We're waiting for some reaction to this. It's very light. Slippery slope fallacy was started by law enforcement. Yeah, it's a silly argument. It's like kind of like saying everybody that drinks coffee is going to eventually go out to do some harder version of speed because they just can't handle coffee anymore. You know what I mean? Like, it's just not accurate. The main reason it's a gateway drug is because you have to go to an illegal drug dealer to get it, and eventually that illegal drug dealer is going to offer you some other sketchy stuff, and thus it's a gateway drug. If you legalized it and taxed it and sold it at dispensaries, it wouldn't be a gateway drug anymore, and that's a very self-evident argument that they don't want to hear, 3D printing sector is interesting. I've wanted to do a 3D printing business myself, but like, I can't think of anything that I could actually create a scalable business with the 3D printer. Pawn and I talked about it. He starts, he has one, but it's a headache, yeah. Yeah. Tesla about to break. I know Tesla's down a lot. It's at 170s, so I don't know what it's gonna do, but it's been down a lot, Bitcoin at 69.5. So Bitcoin is still trying. Bonds are up. Such a slow market right now. Maybe, I guess the whole market's waiting for PPI to show up. Here's the Q. Q's flat as well. What are your thoughts on the Dow? I don't know. I don't use the top or bottom, Matt. I just use the middle. But everybody is different. Some people are going to like the upper and lower bands of it. I don't, personally. VWAP is a trend indicator. So if you're in a trend and you pull back to the VWAP, betting on a continuation of that trend can be profitable. I'm not saying it's going to work. Nobody really knows if it's going to work or not. But you know, I use it for trend purposes. PPI's tomorrow at 8:30. We're gonna stream it live like we always do. All right, Chad, we are going to be doing a crypto show today, so stick around. Also, guys, if you haven't already, check out one of my other sponsors. There's a company called Chart Prime. It's a trading view indicator service that you can use in stocks, crypto, forex, futures. And as I always say, it's not always going to work. Like, nothing works 100% of the time. They are a sponsor of mine, and so I'm biased, of course. But I always try to back test it live. I literally haven't looked at this today. But genuinely impressive, in my opinion. Genuinely impressive. This is the NASDAQ. I've been looking at it on the E-mini. But again, genuinely impressive. So let's back test this ourselves, right? You can kind of test it out here. Like, look, here's today, starting at 7:30. Because I do think we're getting more chopped than normal. But check it out. Strong buy signal, bounce, sell signal, drop, buy signal, bounce, sell signal, drop. You can kind of see it here afterwards. Buy signal, you got a nice little bounce. This one was wrong. This one's still kind of playing out here. But again, most of these worked. Even this one worked, I think. And again, you can look at it on 1 minute, on a 5 minute. And again, I do think it's really impressive. Here's a scalping kind of version of it where it's a 1 minute chart. And again, look how impressive this is. This is a 1 minute version. You got to figure out which one works at which point in time. Look at that one. Nice dips. Nice bounce. Nice dips. Nice bounce. This one played out some. It could still work. Buy signal there worked. Strong sell signal there worked. This one probably was wrong. But 1, 2, 3, 4, 5, 6, 7. One didn't work out of 7 that I can see here. And so again, back test it yourself. You can use it with anything with a symbol on TradingView. And again, I can't guarantee all of these work. I really don't know if all these worked or not. You're going to have to back test them yourself. You can put it on an hourly chart, anything with a symbol on TradingView, stocks, crypto, forex, futures. This is an hourly chart, so again, you can kind of see buy signal, beautiful bounce, sell signal, drop, buy signal, bounce, buy signal, bounce. This one was wrong. This one worked a little bit. This one we're still waiting for. But again, you can kind of see most of the time they work, it looks like. So again, check it out. It's like $40 a month. There's so much that they offer. Back testers, oscillators, screeners. Again, one good trade can pay for it. Although, again, I can't guarantee you're going to make money. Nobody can. They are a sponsor of mine. I'm biased, of course. Remember, They're a sponsor. I'm biased. If you want to check them out, here's the link. Again, also check out Apex funded account programs. For the time being, you can get 80% off of Apex. So you can get 80% off. Here's Chart Prime right here. You sound like a retail trader. Oh, I'm definitely a retail trader, bro. Top 3 retailist trader in the world right now, bro. You know. Also, Apex, 80% off sale, 1-day pass. And again, if you want to day trade, most day traders lose. Everybody in the chat in here is, of course, an expert. Like you always, you know, everybody's an expert. Make 40 grand a day here, making 5% a day, right? But most day traders lose money, you know, just none of the chat. And so if you want to learn to day trade, limit your risk. Limit your risk with a funded account program. Instead of risking thousands and probably losing it learning to day trade, try a funded account program. They give you a demo, they test your skill. If you pass the test, then they fund you, and once you're funded, you get a 90% split. And so you're keeping most of your money once you're funded anyway, as long as you follow their rules. But if you lose, you're only out what you pay for it. The base one is $35 a month for the 25K. When this account you see me trading here where I'm up like 150 on the day is a 50K funded account. Again, I had to make 3K in profit without losing 2,500 on a demo account first. And if I pass that, they fund me. And so again, this is a 50K funded account. And again, it's the best of both worlds. If you lose, it's not the end of the world. You're out $35 for the base one. If you're good enough to pass it, the base one, you get 25K in funding, 90% split. You can use my promo code BT Beginner Trading. It'll get you the max discount. Always remember, guys, I am the most retailish trader of all time. I have no idea what I'm talking about. I am terrible, and I have no idea what I'm talking about. I might be wildly wrong about anything and everything I say, and it sounds like the chat might agree. And so if you haven't already understand this, here's the link if you want to check it out. And with that said, we're going to get ready to go to our crypto channel, chat. We're going to go to our crypto channel. So we are going to be doing a crypto show talking about Bitcoin. Are y'all a bull on Bitcoin this year is the question. Right, are you bullish on Bitcoin this year? We're going to get ready. Let me make sure this works. What? Okay, hold on. There we go. All right, guys. Again, we're actually going to do a crypto show today. So if you have it, what time is it? It is... Yeah, hold on. I gotta log out of StreamYard and log back in. And try it again. Sorry, I'm running into trouble scheduling my crypto show. Okay. Okay, YouTube is experiencing an issue preventing streams from being created and going live. Our engineers are investigating. Okay, so I'm running into trouble with StreamYard. Yeah, so it looks like we're not doing a crypto show today. Yeah, so it looks like we're not going to be doing a crypto show today. It's all right. We can do one tomorrow after PPI. Chat always makes money, you know. How long does it take for the markets to react? I don't know. It looks like the market's underwhelming reaction today. Again, they didn't really say anything new. Hey, thank you, Alex. I appreciate it. Thanks, brother. I appreciate it, man. What about euro, US dollar? Fed has cut the rate. No, they haven't. Yeah, dude, everybody asking about gold. Again, I'm going to start banning everybody if you don't listen, you can ask about gold if you're serious. But if you just say gold buy, gold sell, I'm banning you, right? Bullish on crypto as equities fold. It's Chart Prime, LL. You get 40% off if you use my link. It's in the description. Dow buy or sell? Neither. Apex has paid out over $100 million. But yeah, they don't pay out, bro. You know? Come on now. Your beard is the gold standard? I know, man. Listen. My hair's shorter now, so it makes my beard look better, you know? No, Apex is one of the most legit in the world. Of course they pay out. Top 3 beards in the world right now, definitely top 3. CPI fake dump, PPI bull pump. Will PPI redeem the markets tomorrow, chat, is the question. I don't know. It's Apex. If you check out the link in the description, if you want. Both of my sponsors are in the description. Again, they're sponsors. I'm biased. Yeah, Apex is a sponsor of mine. I love them. You know, check them out. But again, I'm biased. They're a sponsor of mine, so, you know. Hey, dude, what about gold? I don't know. I mean, what about gold? Nine out of 10 times the market reacts immediately. I'm seriously buying gold. I'm in gold right now. I'm actually up really nicely in gold. I bought gold last year. I started DCAing into gold last year. Why is the market not responding to the minutes? It's just not the most. It's just not super impactful today. They just didn't say anything that was shocking to the markets. Again, I think it's probably because it's getting diluted a little bit from CPI. CPI showed up today, big influence over markets, and now you know, the market's kind of underwhelmingly reacting to it. What happened here? Weird. Look, even this cut. Rhythmic disconnected. I bought it 5 years ago. You're probably loving life then. The minutes report's already out, as the big bold letters underneath me. I'm gonna go ahead and close it down, chat. Again, here's the queue right now. Here's Bitcoin. Here's gold. Since all the gold people listen, I'm gonna help you out, bro. Here's gold. Market is very flat. It's been flat for like a week. This is the FOMC Minutes report. Calls bullish or bearish market action. 57% say bullish. They make nice watches. Who? Are you really top 3 retail trader in the world? I'm top 3 of everything in the world of all time ever in the world. You know, obviously I'm top 3 most sarcastic traders in the world right now. But I'm definitely top 3 most sarcastic. I'm gonna get out of here. Silver, I think, is better. Arguable. Are you a bear or bull? I'm neutral in this report. I don't think they said anything that was super optimistic or super pessimistic. I'm just pretty neutral here. Top Step's cool. No, I'm in Texas. You pay yourself, so you're biased? Definitely biased. Top 3. Most biased, some would say, I think. I'm going to get out of here. Hey, y'all be good. I'll see you guys later. Love you all. Y'all be safe. Again, whatever it is, we'll see what happens tomorrow. PPI, the producer price index, the other side of the inflationary coin, drops tomorrow along with jobless claims, unemployment filings. 8:30 Eastern Standard Time. We will be live streaming this event tomorrow morning. Y'all be ready. Again, it drops at 8:30 Eastern Standard Time. 8:30 Eastern Standard Time. And yeah, be ready, chat. I appreciate the love. Thanks so much. We grow by a lot of subscribers today. Oh, wait, is it scheduled? No, it's not. Damn. But I can't even stream it. I'm going to have to delete this. Hey, thanks so much. Hey, listen, we need 150 subs to break 134,000 subscribers today. Listen, I would never beg you to subscribe, but please subscribe right now. Do it now. You know, I'm here out of the kindness of my heart, just trying to help traders. But make sure you check out our sponsors as well, guys. Y'all be good. I'll see you guys later. Good luck.